Well, Alphabet is facing some rare bearish calls on Wall Street with two downgrades in the last week. Bernstein cautioning that investors that it's time to move to the sidelines with the tech giant as it sits at a price with a balanced risk reward. The analyst behind that downgrade, Mark Shmulik, is joining us now. Not only do you talk about the balanced risk reward, but you say thanks for the warm hug to Alphabet. You say that the stock is normally like a warm hug. I guess if we stretch out that analogy now, it's like a smothering embrace. I don't know with the valuation where it is. I mean, is this call pretty much all to do with where the stock is priced right now, Mark?
Yeah, exactly. I guess if it was a warm hug, maybe they've been hanging on too long and, you want a little bit of personal space. And I guess that's natural for an investor. When the stock's up 40%, year to date, and a lot of that move has been kind of driven by a re-rating in the multiple tied to first getting hit off of a negative AI narrative and then recovering, with a very positive AI narrative. And yet underneath it, there's been very little change to kind of the underlying fundamentals. And so I always get a little bit nervous when a stock runs up into my price target. And a lot of that is driven primarily by narrative, but no real dramatic change, in fundamentals. And, when I stepped back and actually looked at the fundamentals, the story ahead of us, ignoring or putting the AI piece to the side, tells me a stock that feels very fairly valued from a risk reward perspective right now.
And so part of this, too, you mentioned from too slow to too fast in AI. Talk about the too fast side. What is that, if there's any clarity around how much they might be spending in this near term on generative AI in order to not miss out on what that wave could mean for their business and perhaps compromise market share, how you're evaluating what that spend may look like as a profile basis for this company?
Yeah, of course. And, there's a couple kind of factors to the question. But, the first part is, they were perhaps caught a little bit off guard at the start of the year with some of the announcements, the immediate success of ChatGPT, Microsoft's push into search with Bing. And so there was what we've actually seen from them is a real pivot in moving very quickly to get, AI out there and integrated everywhere at a speed of which we've never really seen in a very long time from Google. So on one hand, that's really great to see such a fast product shipping cadence. On the other, when we're already starting to see generative AI embedded in kind of core Google search results and kind of SGE, what it's done is it's taken up valuable real estate from otherwise, those very famous blue clicks that they make a lot of money off of. And, what we've observed since March is, open roles on Google have quadrupled. We know Capex is going to come up as everybody's, arming themselves up for this AI arms race. And so our worry is when we look at Google relative to some of the other companies in our coverage, they weren't as aggressive taking cost out as we've seen certainly from the likes of Meta, which means as they're absorbing these new costs, there's just a lot less headroom for them to absorb.
And one of the other things you mentioned in your note that I thought was interesting is the regulatory landscape. Of course, regulators have been looking at big cap tech for years, Alphabet included. What do you think is particularly maybe risky about the current possible regulations for Alphabet?
Yeah, regulation's always tough to handicap. There's always something going on. And I think what I'd look at it is kind of from two lenses. One is just the amount of regulatory activity. And there's certainly cases, in Europe, their compliance with the DMA coming down. They're most exposed in terms of the amount of work they need to do to comply. There's the case on their network business, which if they're found kind of in violation could be a fine of up to 10% of global revenues. So we're talking bigger financial numbers. And then perhaps more interestingly or more importantly on the docket here in the U.S. in the fall, the case is going to trial really around their core search business and, exploring that relationship that they've had with Apple, where they've effectively been paying to be the default search engine on iPhones. Now, unclear if anything comes from it, but there's clearly a lot of activity kind of hanging over Google at the moment.
All right, so from here, we're looking at an Alphabet that has also got multiple subsidiaries under it that I think have come under fire recently, especially with YouTube and one of the more recent discoveries that perhaps they weren't. I was reading into this yesterday, and I'm still not sure I fully understand it myself. Perhaps you did as well, and just how some of these service level agreements may have been violated and what that may mean going forward for the company in terms of having to forfeit or at least repay some of their customers. Is there any clear kind of analyst take on that from the street thus far?
I'll share my kind of very initial kind of knee-jerk take on it, which is, the report that came out was effectively that when you buy ad inventory on YouTube, they also sell you ad inventory that's off of YouTube. Now, there's very specific measurement requirements and placement requirements to make sure those ads are front and center and that the viewer is actually watching them. And I think what that report was pointing to is that allegedly YouTube was putting some of those ads maybe in the sidebar and started to autoplay where you might not have seen it, but then you'd effectively have to pay for it. Now, that's unclear, to what extent whether that was happening or not. I don't have any view on that yet. But what it does tell me is, we've kind of forgotten about it these last few years, but there's always been, advertiser hesitation with YouTube. Prior to the pandemic, there was almost an annual advertiser boycott for something to do with either placement of the ads, brand safety of the ads, or really just the associated quality. So all it does is bring some of those advertiser fears back to the forefront, which just pressures the ability for YouTube, growth potential.
And ahead of a general election year as well, Mark. So there's that kind of added on to it. We have to leave things there for now. Can't wait for even more of your insights and your take on that particular matter. Mark, thanks for taking the time here with us today.